Are you ready to stay on top of what's happening in the Phoenix housing market? Let's dig into the MLS and see what the numbers tell us about what's going on. June was an interesting month for the Phoenix housing market. Comparisons with this time last year are starting to get easier. As a year ago, the market was cooling down and demand from institutional investors and iBuyers slowed severely. A steep rise in interest rates also had the market spooked, and ordinary buyers were also holding their breath. A year later, we have a market which is seeing very low demand and even lower supply, with the 30-year fixed interest rate stuck somewhere around 7%. Most homeowners do not want to sell and are struggling to qualify to afford a home. Buyers are unimpressed with the low inventory of resale homes and are increasingly turning to new build homes. Developers are enjoying strong orders and firmer prices, healthy margins, but have relatively low inventory for homes for sale and a weak pipeline of new permits to build. The strongest sector in the housing market is single-family new construction. Some drastically overstate the importance, though, of interest rates in determining home prices. Interest rates are important, but when they move higher, they lower supply as well as demand. It is the balance between supply and demand that determines how home prices move. At the moment, supply is much weaker than demand, so prices are actually increasing since they have in January. For homeowners, rising prices are reassuring, but for agents, the low volume is a huge problem. There are remarkably few new listings, and closings are declining as we enter the summer doldrums. Title companies, lenders, warranty providers, inspectors, and appraisers are all suffering from a prolonged weakness in transaction volume. While interest rates remain at 6.75% or higher, we appear much likely to see improvement. In fact, rising prices will make it even harder for buyers to close on a home. This could weed out some of the underperforming professionals in the industry. However, if interest rates were to fall to 6% or below, we could see a sharp increase in demand followed by an improvement in supply. We will shortly see the average price per square foot for closings overtake the figure from a year ago. At the moment, the gap is 4.2%, but last year's prices were falling fast, and this year we are seeing a rise of almost 3% in just 2 months. The third quarter is notorious for weakness in average pricing, but even if closed prices stay flat for the next 3 months, annual appreciation will have turned positive by the end of the quarter. Here's how the numbers shook down for June. Active listings, including under contract and contingent buyer sales, are 11,545 versus 14,406 last year, down 20% and down 1.6% from 11,730 last. Under contract listings, including pending, contingent on buyer sale, and under contract accepting backup offers, were 7,858 versus 8,621 last year, down 8.9% and down 13% from 9,028 last. Monthly sales were 7,377 versus 8,113 last year. That's down 9.1% and down 9% from 8,110 last month. In June, the monthly average sales price per square foot was $287.76. This is down from last year, which was $300.43, down 4.2%. But it's up 1.5% from $283.71 last month. Monthly median sale price was $443,000 versus $474,374 last year. That's down 6.6%. But once again, it's up 2.1% from last month, which was $434,000 even. Even though we have cooled off from the pandemic frenzy, we still remain in a seller's market. And transactions, they're still happening. If you'd like more information about how this affects your home value, just drop me a comment and we'll figure out a way to connect. Also, this is a new channel, so don't forget to like this video and subscribe to the channel. We'll see you next time around.